Hi, I'm Sonia and with me is Owain Bennallack and we're here today for another Ask a Foolish Question video. Aren't we, Owain?
We are indeed, Sonia. Yep,
Brilliant.
So ask away.
Okay, the question today is from Rob and he's a new investor. And he's saying there are thousands of investments available in the market today. How do you decide which ones suit you? How do you choose?
Well, the first thing to bear in mind is that you don't need to choose. You can be what's called nowadays a passive investor or index tracker investor, where you basically buy the market. You say, I'm not going to say this share is better than this share. I'm just going to buy all the shares via a tracker fund. And that way, you've got a little bit of skin in every company and you will get the average returns of the market. So first of all, you don't actually have to choose to follow any particular style. Obviously, many of us do, but that's sort of a secondary stage.
Great, so you get a lot of diversity that way as well.
You immediately get diversification. When you read in the historical books that shares went up by X thousand% over 100 years, you would get that return.
Okay, so what would happen then? How would you decide if you did want to self-invest?
Yeah, so after that, you can follow the patented method that I use, which is to sort of try everything.
Okay.
For a year, and it's a completely disastrous thing to do, but you kind of can't help it. So first you will read a couple of investing books and you'll think, right, I'm going to be a growth investor.
Yeah.
And that would be where you were looking for companies that are growing their earnings very nicely. Probably one or two of them will go wrong because you won't be a very good growth investor. So then you might think, I'll be a value investor. So then you'll go, I'm going to look for companies that have strong balance sheets, have good asset backing. Then you'll find out they don't actually grow, and then they'll go down the tubes. And then maybe you'll think, I'm going to be an income investor, so you'll buy a lot of income shares. Some of them will be big banks that cut their dividend streams. There goes your income investing. So I'm being slightly facetious, but it's because you have to expect it to be a learning process.
Yeah.
You have to find a style that suits you. Eventually, you'll realize you have a feel for a certain way of stock picking. Maybe dividend investing does suit you. You start to discern between the companies that have sustainable dividend yields and those that are just where the yield is high because it's going to be cut. Maybe you start to be able to see the true growth companies and not the sort of fly-by-night blue sky companies. So I think it's important to try everything, perhaps with a small amount of your money, maybe put the rest in a tracker and start to understand how you are responding to company news and kind of evaluating companies.
Okay, so you could actually also just line your portfolio first with some safe shares, the dividend-paying ones, but you do your research, of course.
Yeah, exactly. And then you might decide that you want to go into large caps or small caps as well, of course, which is another kettle of fish. So large caps are normally considered safer, smaller caps perhaps more rewarding. But there's so many generalizations. As you say, there are thousands of shares out there. So you don't have to rush. The market's still going to be there tomorrow, so just move at your own pace.
So was I wrong to suggest that there are safe shares, Owain?
There are no safe shares, Sonia, as my portfolio history can record over the last 10 years.
Okay, brilliant. Well, thank you, Owain. If you have a question for Ask a Foolish Question, please send them to foolishquestions@fool.co.uk. Thanks for watching.